Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number here. And if you want to pick up the phone, give us a call, and we can talk to you about what you are thinking right now. This is July 2019. What opportunities are out there in the marketplace for you to take advantage of? And what are some of the pitfalls that you might want to avoid? We're going to talk about a lot of that on the show today. We have three great guests. Two of them haven't been on the show before, and we brought a title person, Sharon Roos, to talk to you about some of the title issues. Now, title itself in America is really not necessarily a big problem, but you need title insurance, two types of title insurance. We'll get into that with her, but she'll be coming up on the show. We have a nice commercial person and somebody to talk about different loan scenarios with you, as well as Jacqueline Hune. I hope I pronounced that right. How do you pronounce Huynh? Wynn, thank you very much, and I apologize to Jackie. Okay, she's been on the show once before. She's written a couple of books, and we want to talk about that. True Legacy Wealth in America, how is that attained, as everybody knows from listening to the show several times or once. You've heard me say it once, you've heard me say it 1,000 times, as the saying goes. Wealth in America is created by real estate. Buy low, sell high. It's not a complex formula. It can be fun along the way. I run a company called Malibu Funding. They sponsor the show. They pay me. I'm really pleased. Their NMLS number is 79620. But they have a lot of answers too, and they've helped me get my house in order when it comes to my own real estate and my own financing, getting into that with both Jacqueline and Janine will be part of what we do on the show today. I was talking to Daryl offline, and we were talking employment. Let's talk a little bit about employment. I hire people, and Daryl, you've hired many people.
A couple of hundred, yeah.
Yeah, exactly. And that process today is different than it was. Tell them, the people who are listening, the difference in hiring today versus hiring 20 years ago.
Well, 20 years ago, people would sit down and they would go over a list of their attributes and tell you what they could do for your company and how they could do better and make things better and enrich the company and the people they work with. These days, the applicants just want to know what the company can do for them.
Right.
They have a laundry list. How many days off do I get? If I come in early, do I have to leave late?
Right. No, it's true. And I take it on myself very seriously, this business of paying someone. Why? Because I know what it costs for me to be able to make enough money to pay somebody. And the responsibility to do that, I don't take lightly.
Well, I mean, sometimes when you hire commission salespeople, right, they want some sort of a draw. I'd say, well, if I pay you that kind of a draw, if you don't produce in a couple of weeks, we're done.
Right? Exactly.
If you work for a little less as far as the base is concerned and learn the product and get in the field and build a career out of it, rather than just calling it a quick bunt, so to speak,
yeah,
then it's more worthwhile.
Well, most of my salespeople, and we have about 60 or 70 in several states around the country, they're older. They're not younger people. They're people 40 years and above. I call that older because they're seasoned. They've already had one or two jobs, and they've been around the block, and they know that the reason they work for a company on a commission basis is because they can make money, because they're good at what they do. And that's really the difference between somebody, like you're saying, who walks in the door, wants something from you rather than offering you something.
Well, I mean, that's what the older, as you will, generation brings to the table is, first of all, experience, and second of all, they know what to say in a job interview.
Right, exactly right. And I think the difference, I guess, for me in the desire to want to hire is simply because I hire older people because of that, because of the nature of the ability to be able to earn for you And I'm very generous in terms of the compensation packages. That's not the issue. The issue is, can I trust a person when they walk in the door and say to me, hey, I can do this job for you? Well, somebody who eats off of what they make, i.e. salespeople who are on commission, are trustworthy because they're not going to come to you unless they can make a living. They'd just rather go out and get a salary-paid job.
Yeah, they don't play hopscotch. They don't waste your time.
Right, exactly. Okay, so in talking about the internet, because most of the business done nowadays in terms of what we do in the mortgage industry, as well as in the real estate industry, obviously Realtor.com and Trujillo and Redfin and of course, what's the big one? Of course, I'm missing the big one. Zillow, right, Zillow.com, that's a big one. All of these companies do all of their sales online, and they are linked with real estate agents, and they're linked with mortgage brokers, and they have paid advertising, and that's how they make money. That's how they do what they do. A lot of people who are in companies like mine, smaller businesses, but certainly businesses that can afford to hire IT people and afford to hire people to be able to do jobs to promote their business, are looking for solutions from the marketplace. I have been in the market for those services for years. I was early adopter to the internet. I was the first one to bring photographs to my website from properties, and I built a database of all the condo buildings in Santa Monica, California, and this is back in '96, way before any of these aggregate sites got put together as Zillow or Realtor.com. So I'm very, very versed to wanting to participate in the process itself. When I get to people today, and this is the gap I'm talking about, and maybe you have answers for me, and I'd appreciate that, or maybe you've experienced some of these issues when you're talking to people, especially if you're in the younger demographic. I know that there are dinosaurs like myself. We're called dinosaurs simply because we're old, not because we're necessarily, fossils. But younger people want to be able to have control via the internet, and that's just the way it is. Whether it's through a website, an app, a telephone, whatever it is, the control of the process to be in the hands of somebody who is younger or who is used to the technology. I'm used to the technology. I think I invented the technology a lot of times in terms of how users interface with what's going on online. So what happens? I'm out there and I'm looking for people who can up this particular show or any of my media projects on YouTube to be able to draw more visitors, more people to come. And I've probably had 4 or 5 or 6. Daryl does a great job with the show. We've had other people try to do a job with the show. At each and every turn, you are sold a bill of goods about the internet as if it is a mystery. Is it a mystery?
No.
No, thank you.
No.
So what we need to do is to really look at what the job is. I had a recent interaction with somebody who had a nice website and who claimed that basically listening to them and doing what they said was worth around $5,000 a month. Now this may seem nothing to most people, but small business people, you know what I'm talking about. You want some answers, but you want to pay $300-400 a month. You don't want to pay $5,000. And what's the difference between $300 and $5,000?
$4,700.
Right. In service, nothing. Because there are people out there who can do the job for a lot less. And I think the important thing for me to always understand is, and because I'm a salesperson, I'm easily sold, but promoting your business, and we're all about promoting businesses here on the show because that's how you're going to make your money to afford to buy the house you want to buy. And it's a great time to buy that house right now because rates are good. There seems to be enough housing right now around to keep prices steady, and everybody's working. So all these things combine to mean that if you can build your business, and what I try to do is to build it slowly, conservatively, and cheaply. Why? Because tomorrow I got to be in business, not just today. I'm not here to fund somebody else's business. I'm here to promote my business with a responsible person who can look at what I got and give me an honest price and be willing to go to work and to bat for me at each process and to teach me. That's what I really need. So if you're out there and you're listening to the show and you're going, oh, okay, I understand that, I hope you do. And if you have a question or answer or a solution to what we're talking about here on the show today, please give us a call, 888-713-2929. Thanks for tuning in. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, we can help you with your questions. You must have questions, right? I mean, it's that time of year. You want to buy something. Maybe you want to sell something. You want to step up or step down from your current property. There's all kinds of things that you need answers for, and we certainly can help. We try to do that each and every week on the show. We bring to the show all the time different guests from different walks of life, different facets of the business, experience, and people who really know what they're talking about. Our next guest is Janine Tang from Olympia Financial. I've known Janine for a number of years, and I welcome her to the show. Janine, how are you?
Thank you very much, Jeff. I'm doing very well. Just, up for a Tuesday and staying really busy after the 4th of July holiday.
Yes, I know. It is busy. And you know what? This show will be aired on the weekends, every weekend at KCAA, KMET, and K-Tahoe. I want to start right off the bat by asking you a little bit about your company, some of your experience, so that you can let the listeners know exactly where you're coming from.
Yes, thank you, Jeff. We've got a private investor pool, and, they're ever-changing. Some investors do drop out. New ones come in, depending on how much capital they want to tie up. But, we have some investors who have certain criteria, certain collateral that they'll look at, because what we do is private money financing. So all we're primarily looking at is collateralization, cross-collateralization, loan-to-values, and we will do any type of investment loan, whether it's a first or second trust deed, for business purposes and investment purposes only. The appetite for our investors definitely changes, as well as the market.
Right.
When that changes. So it can get, sometimes it can get really competitive as more investors enter into the market, and sometimes when it's less, when there's less capital available, it becomes tougher to get these deals through, and they become more and more selective with the collateral.
What's the typical type of loan that you do? Give us an example of something you're doing or have done recently.
Oh, that's a great question. So we had a property that was commercial property, and it's assisted living.
Okay.
These type of properties are very specialized with multiple rooms and very specific. So not every investor wants to touch that type of collateral. And we had a purchase on this particular property. Some of the other private investors would only approve it at 55% loan to value.
I see.
We were able to, so we were able to go up to 65%, and we actually got creative with this one because we had to cross-collateralize some other property that the buyer had in order to ensure that, that the LTV would be sufficient, because the value was a little bit pushed on the purchase price. Again, we looked at the rent rolls, we reviewed the leases in this instance, and wanted to ensure that there was enough cash flow coming through. So for the investor to feel that they could get more competitive on the rate and push a little bit more for the value, we cross-collateralize another asset.
Now,
because this buyer tended... I'm sorry.
No, it's okay. I apologize for interrupting you. I just had a quick question about when you're in a situation like this. Because you are a private money group, you're able to do something like you said, i.e., okay, we're going to mitigate maybe the LTV with more collateralization, or we're going to look at the appraisal versus, how much money you have in the game. This is part of the benefit of going with someone like yourself, right?
Correct. I mean, if we get a lot of desperate situations where somebody wants and needs to close a loan within 3 business days. Let's
Right.
just say they're strapped for cash, there's a divorce settlement, they need to meet the demand. So we are their saviors because, immediately when we get the conditional loan approval, loan contingency, we can go to docs, draw the docs with the attorney. So it can be a quick funding for people in dire need, but again, there has to be collateral. People who come without the equity in the collateral, without enough LTV, loan to value, then we have to look at possibly cross collateralizing with other assets should they have some.
Do you do personal collateralization, or is this all real property, right?
Yeah, this is all real property, but
Right.
we had an instance several years back where somebody, this is just kind of off the beaten path, not too
Right.
many borrowers have this, but they had a 747, jet at the airport hangar. So that was something that was completely not the norm of how, these investors do business, but there was enough equity in there to warrant the, collateralization to warrant the deal. So again, it depends on the investor's appetite. Some investors are a little more aggressive, some are a little more conservative, but the fact that we do second trust speeds up to 70% LTV and cross collateralize is definitely makes us stand out and is definitely something that people think about us for.
Listen, the underwriting process and the cost, 2 things that people are interested in. How hard is it to get these loans, and then what's the cost?
Okay, underwriting process really, it's basically the collateral. We don't necessarily need an appraisal, and each investor pool will look at the valuation a little bit differently. Then we just basically need a credit report, a 1003 application, and then if there's rent rolls and contracts, if it's a commercial or mixed use, then we need those as well. As far as points, I would say the points would range from 2.5 to 8 points. It just depends on the scope, the nature of the deal, the complexity, what type of collateral we're talking about, and the rate as well.
And how quickly you have to come up with the money. I'm sure that's factored in as well.
Yeah. Oh, so that's usually our loan approvals are only good for 7 days, for a week, because there's a sense of urgency because the investor does not want to tie up capital. If you're not going to move forward, they're not going to commit. So their loan commitment for this is usually a week long. Sometimes, I will get an exception. If an investor really likes the collateral, they'll extend over that period of time. But the standard times for these conditional loan commitments is 7 days.
Okay, so the process seems fairly quick then, right? Obviously,
Yeah.
people coming to you are coming to you because you have that reputation. Is that part of it?
Yeah, so they're coming to us because they're in a bind, and we have a reputation of delivering quick with speed. We're a private lender. We're not going to be the cheapest. So, if you're looking for the Wells Fargo deal, the B of A deal, we are not that type of private lender. People who come to us definitely know the ease of execution and the quickness with that execution, and there's a price to pay for that. But
Right.
it's worth it for them because they're in dire need.
Okay, could you shout out your phone number, a way to get in touch with you? So if people are looking for this scenario or somebody to help them out in a situation like this, they can get a hold of you.
Yes, absolutely. Thank you very much, Jeff.
Sure.
Again, I am Janine Tang with Olympia Financial. I help everybody with private structural financing, and my number direct is 818-512-4594. Again, one more time, 818-512-4594. 4594, and I'm on Ventura Boulevard in Encino.
Okay, that's excellent. I really appreciate you coming on the show. I'd like to have you back just because I'd love to follow the way the market goes and how things change, and they can change quickly. So let's have you back on. Thanks for coming on today.
Absolutely. Thank you very much, Jeff, for having me. Wonderful to be a part of this, and looking forward to coming back soon.
Great. Thanks very much. That's Janine Tang from Olympia Financial. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number here. Give us a call. We try to answer questions that you're going to pose to us. And you know what? I want you to stump us. Give us a question that you just have no idea, and possibly we don't have an idea. But the great thing about what we do on the show each and every week is we bring people who do have answers, people who do know what they're talking about, people who have experience, who have seen scenarios 1,000 times, if not once. And in order to be able to do that, we search around and try to come up with interesting guests who have not been on the show. And we have another one this week, Sharon Roos from Lawyers Title. And I asked her, and first off, hi, Sharon, how are you?
I'm good. Thank you.
Thank you very much. I asked her on because, you know, we haven't had a good title officer on for some time. So I'm going to ask some ridiculously simple questions, and if you're out there and you're thinking, oh my gosh, he should know that, well, I probably do, but there are many people out there who do not know. First off, thanks for coming on the show, Sharon. I really appreciate it.
Thank you. My pleasure.
Okay, so title insurance. Give us a quick, what is title insurance and why is it necessary on every deal?
So title insurance basically protects the buyer, but the seller pays for it.
Right.
It protects the buyer from any liens and encumbrances that the seller has put on the property. So it gives clear title to the buyer when he buys the property of any liens or encumbrances that the seller may have put on the property.
And
it also insures them for any boundary line discrepancies.
Okay, that sounds very succinct and very simple. So one of the liens that a seller has normally is a mortgage, right? A mortgage is a lien against the property, i.e. you owe a mortgage and it's a lien. The collateral for the loan is on the property. And that's one of the things that gets removed with the paying off of the loan, but the insurance is what ensures that the buyer doesn't have to worry about it, really, right?
Yes, so we do the payoffs on those, and we make sure they're paid off, and that the only loan that's going to be on that property is going to be the buyer's new loan. And we reconvey the old loan of the seller.
What does that mean, reconvey?
Reconvey means that we pay it off, and we do a full reconveyance, which is a document that we use, which is called a full reconveyance. And we reconvey that document by the lender, and we pay it off in full so that it no longer is against the property.
Now, this information, all these documents, this very officialdom, most people have no idea, and it's included in what they call a title report, right?
It is. It included what we call a prelim, which is something that your client would get. They're going to get a prelim, and the prelim shows all the outstanding liens and encumbrances that are presently against the property, and then they get a policy which shows how the property is at the end, which only shows what's against the property with what is presently against the property at the end, which is the buyer's loans only.
Right. Now, there are a number of weird situations that get recorded on title, right? I've been involved in some. There was HOA lien on a property where someone had quit claimed the property from themselves to somebody else, and there's a what they call a cloud on what.
Lots of awful, ugly things can be recorded against properties. There can be judgments, there can be liens, there can be lawsuits pending, which we call less tenants.
Mm-hmm.
Lawsuits pending can be all sorts of things. But when you see a lawsuit pending, that's not a good thing.
No.
Because it doesn't have an exact amount, and it's impossible to be able to close unless we know an exact amount, and we can bond around it or do something to close. So lawsuits pending are not good.
Now,
and you can have mechanics liens as well.
You mentioned a couple of things here, the bonding aspect, and that some of that solves issues with clouds on title if something is known, but yet the person who's owed can't be found, something like that?
Okay, so in the case in which, let's just say, somebody says, I don't want to pay that, let's say somebody puts a judgment against you, and they say, I don't want to pay that because I don't owe it. In some cases, you can bond around that item. And what that entails is getting a bonding company to put up a bond and to bond around that item until you can sort it out with the person who has a judgment against you.
Is that often done? I mean, in Southern California, let's just talk locally.
In refinances, yes. In sales, no, because you do have to deliver free and clear title on sales.
Right.
But on refinances, quite often, yes.
I see. And in speaking of some of the most bizarre things, can you give us an example of maybe one or two that stick out in your head as to be some of the most outrageous liens you've seen on a property, or is that asking too much?
I've seen ones for, I've seen people put judgments against people. And, see, you can't really get too crazy with a judgment because you actually have to go to court.
I see.
Okay, so, but I've seen people put judgments against people for child support.
Yeah.
And obviously, they've got credit card liens.
Of course.
Outrageous and weird. I saw one for clothes.
For clothes, really?
Clothes, for a shopping spree. I saw one for a shopping spree, and it was quite a lot of money. It was over $1 million for a shopping spree.
Oh
So
my!
I think that was probably the most outrageous one I've ever seen.
And it got recorded.
And it got recorded, yeah, and he actually won that judgment in court.
Oh my! Oh wow! That must have been some prenup or some postnup or whatever it is.
That was some shopping spree with his credit card.
And who got the shopping spree? Was it a guy or was it a gal?
It was his girlfriend.
I see. That's what it was. That's really unbelievable. Listen, I have about 2 minutes left. Cover the cost a little bit about what title insurance and how the prices are derived. I know in California it's regulated very heavily.
Okay, so title companies have to register their fees with the Department of Insurance. We usually do it every 6 months with the Department of Insurance for refis and for sales. And our fees right now are very, very low for refinances. I don't think anybody's lower than our fees right now for refinances.
Okay.
So our fees are very, very low for refinances at this particular point in time. And then for sales, they're also quite low. And then there's a separate fee for the buyer's additional ALTA lender's policy. So on a sale, you have the price that the seller pays for his policy, which is for the buyer, and then there's the additional ALTA lender's policy for the buyer, because he's going to get a lender's policy for however amount that he's going to get for his new loan. So there's two policies on that.
Right. Okay. Hey, listen, we're running out of time. Could you give the audience your telephone number, maybe best way to get a hold of you if they actually need some information, more information? Great.
It's Sharon Roos of Lawyer's Title at 818-402-5558.
Okay, Sharon, thank you very much for coming on the show. I want to have you back just because this is an ongoing and interesting facet of the business, and not a lot of people know about it, really.
All right. Well, thank you so much. I have a lot more to cover if you want me to have me back.
Thank you, Sharon. Thanks very much. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929 is the telephone number. If you pick up the phone and give us a call, we can help you with your questions that you have about what's going on in the real estate market here in Southern California and across the country. This show is carried on 3 different stations in California, but on YouTube, that makes us available everywhere. Malibu Funding, the sponsor of the show, is in 10 different states, and we have a reach from many different social outlets all over. So if you are listening to us, thank you for tuning in. If you're watching us on YouTube, thank you for watching. We bring to the show many different types of guests, people who have got answers to your questions. I don't have them all, and I would be the last person to say I did. I have many, many years in experience in the business, but most of what I try to do is to bring to you, the audience, people who know, have answers, have written or talked about throughout their careers. And today, again, no exception. Jackie has been on the show before. Jacqueline T.D. Wynn, author of True Legacy Wealth and your amazing Itty Bitty Family Leadership book. I want to welcome her to the show. Jackie, how are you?
I'm doing awesome. Thank you so much for letting me be on the show.
Oh, no. Are you kidding me? It's great. I like your perspective and what you bring to it. I wanted to ask you just a couple of questions about the literature, the books that you've written. First off, do you like writing? Does it give you a sense of accomplishment, or do you do it as more as a public service to try to educate people?
I think a little bit of both. It inspires me because what I know, it enriches my life, and I also want to share it because sometimes I think we want to leave some sort of legacy when we're gone, and what if we just keep speaking about it and it's not on paper,
right.
How are people going to be able to continue our knowledge?
Interesting that you use that analogy, because the title of your book, True Legacy Wealth, talks about real estate as being the legacy that you as a person can leave to, future generations. So the crossover there is, I guess, from your experience, how do you explain to do that to people who may not understand that that's the way most people get to be millionaires in the U.S.?
Well, I read somewhere an article online that over 80% of millionaires have become millionaires because of real estate.
Right.
Over the last 200 years.
I agree.
And right, and they've left their knowledge of creating this wealth in real estate empire to their children and their grandchildren and their great-grandchildren, and they have continued on that legacy of building a lifetime of paycheck for life in some sort of business or in some sort of real estate venture.
How do you explain is your book mostly about a how-to, or is it a story of your own success?
My book is about really it's about generational wealth. So the first one-third of the book is about why you have a family. What's the purpose of having children? And what are your vision and your values that you bring to your children, and why it's important that it's not just about money. It's about who you know, what you know. The second part of the book is really about the benefits of real estate investing and bringing your family in and creating a family business, because real estate investing is one of the things that you can actually bring your family into. Take them to homes and show them the profit and loss statement. Have them meet the vendors. All these things that they can learn. You can't take them. You can maybe take them on one day at your job.
Right.
But it's not the same thing, right?
Right.
So it's a family affair. That's the second part. And you can use them as a tax deduction. They're actually not a liability. You can have them take out the trash, do your social media, and you can pay them, and they're now an asset. And then the third part of the book is our turnkey program that we do everything for our clients managing all the way to, rehabbing and finding the properties.
Okay, interesting. Last part. Let's talk a little bit about that. Identifying opportunities, or are you looking, I guess you would have to ask the client, what are they looking for in terms of, do they want to hold? Do they want to hold for a long period, a short period? Do they want to sell? Do they want to flip? You have to get this in an interview process, I assume. How do you do it?
Exactly what you said. It has to be an interview. Every single person is custom. You wouldn't go and buy a mutual fund just based on whatever, right? You would sit down with someone, talk about your goals, where you are now, what you want, how much funds you have, and all that, and then we custom every single client. Is buy and hold better? Is fix and flip better? Maybe it's a combination.
Right.
Maybe it's syndication. Maybe it's multifamily, depending on where they're at. There's so many, as you know, aspects of real estate investing.
Yes, there is. And do you enjoy the process?
I do. It's exciting. It's, every single person that I work with or I talk to is different. And that keeps me on my toes. It's not cookie cutter.
Okay. Now, the book on leadership, describe what that is, because I find leadership, it's odd. Leadership defined is getting other people to do what you want. So in terms of what you describe as leadership, how would you describe it?
I think leadership comes from not leading people, as it says lead. It's leading from behind. Mm-hmm. So it's basically, how do you want to be remembered? Are you motivating people? It's more about motivating and inspiring them. And that kind of leadership is from behind and not pulling and getting people to do what they want to do. It's more of a win-win. How can we both win?
Right.
And not about just you winning or me winning. That's true leadership. And successful companies have a very it's very concrete what they do to become successful. And leadership has a huge impact on how successful companies become successful. And that's what my book is about. It's a family leadership book. It's 15 simple tips successful companies use that families can implement at home, because your home is a business.
Right. Okay. Give us an example of a couple of them.
Okay. One, core values. Every successful company has core values, what's important to them, what they live by, what their employees live by, why they make rules. Well, families are the same. You should have core values as a family. What's important to you? And those are things that you reward by, that you discipline by, you make goals for, you set your mission statement, your vision statement for. Mm-hmm. So that's one thing. Culture. We talk about company culture.
Right.
Culture is what it feels like to be in that company. It's all the soft skills, the inside, right? Well, a family has a culture, and if you it's either by default or by plan. And the ones that are default are not very happy.
Well, I think, a planned life, something which you can point to as always a touchstone, either in your business or your family, probably both, especially if you're opening up to the real estate business in your entire family, is probably the best way to go about it, so that the intention of what you're trying to do each and every day is based on really as you said, your core set of values.
Yep. Exactly. I couldn't agree more.
Listen, all this is really interesting. What's your next book?
Well, I actually have a compilation book out. It's a bunch of women who wrote each chapter, and that's coming out next year.
Oh, I like
it's
it.
About our success, and I love being surrounded by women. I think we we bring a touch of emotion in there that sometimes being around all the corporate stuff can lack.
Yeah, no, I think, letting people be who they are and to be successful and celebrating that is a great thing. We need more of it, not less.
Yes, absolutely. We need to be in touch with our emotional side and our logic side.
Absolutely. Hey, Jackie, we're out of time. That was really quick. I want to have you back. Please say yes. Thanks for coming on. Okay.
Anytime. Just call me.
Okay, excellent. And if people want to get in touch with you, what's the best way to do it?
You know what? They can go to my website, integrativelegacy.com, and my anywhere on all my pages, there's a way you just contact me, and you can schedule a time to speak with me right on my website.
Integrativelegacy.com, right?
Legacy.
Yes. Okay, very good. Jackie, thanks very much for coming on the show. That's Jacqueline T.D. Huynh. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, our telephone number. If you'd like to email us, info@malibufunding.net. And you can see this show as well as many others, as well as the Las Vegas Real Estate Show on our YouTube channel. Just go to YouTube and type in Jeff Barton, the real estate voice. And this, as well as every other show that we've done over the past few years, and the Vegas shows will come up. It's interesting to see as we go back in time. I've actually gotten much better looking during the past few.
You're a strapping individual.
It's just, not that I watch it every day, but, every other day. I'm kidding, of course. The information on there is mostly from the guests that we bring on to the show. There are some great guests coming on and have come on the show, and I really want to thank them for coming on the show. It's nice to see opinions of people and to get information out to the public. That's really the basis by which we wanted to bring this show to you. Malibu Funding, nice enough to be able to sponsor the show. And I got together and said, look, information to people is really what the internet, what advertising is about. It's permission-based, it's trust-based, and it allows the consumer to consume via the radio or go to YouTube or any number of other sources you might get this information from us. You can go to KCAA, you can go to KMET, go to K-Tahoe, any of these outlets where the show is aired, and to be able to hear us as well as see us on a couple of these outlets, that's in your control. If you do need help, you give us a call, you email us. However, you do want to get in touch with us at Jeff6493. That's my Twitter handle, and I tweet out a mortgage minute about once a week to give you an idea of what's going on in the mortgage rates. Okay, the housing sector. Let's get a little bit to the news to use section. The housing sector. What signals are the markets sending to us about what's happening in housing? Well, in the housing markets, interesting thing. We have chief economist from Realtor.com. His name is Danielle Hale. Says that there are growing signs that bidding wars are coming up. Now, this is because of the fact that what we have year over year is less housing being made, i.e. there's less available on the market because there's less being produced or built. So we're looking at possibly in late year, September, October, less housing this year than there was last year, which means that you're going to get more people bidding for fewer houses. That's why the economist here, Ms. Hale, said essentially that we could have some bidding wars late in the summer, which again is a way by which I'm saying if you want to buy something, right now is a good time. Interest rates. Let's talk a little bit about the mortgage interest rates. Oh, and there's another article here from, let's see, where is it? The articles, it's called Bulletins, Goldilocks Scenario for Housing Continues. And this really talks again about the great economy we're having, the low interest rates, and the inventory that has remained steady. The same two articles here appear all over the news, and if you're out there and listening to my voice, you'll know that that's possibly true just because you're out there in the marketplace looking for housing, and you can absolutely see that, okay, prices have remained steady, not rising, 6 to 10%, but more like 2 to 3%, as we predicted back in January. It's now July 2019, so there is still time for you to get in on a pretty good market as interest rates have remained steady. We're waiting the Fed to see if they're going to lower short-term interest rates, which don't necessarily affect the mortgage rates, but they may affect the bond rates, and they may affect supply and demand in the bond area, which is definitely what's happening for the mortgage rates. If you get bonds with a high yield, you're going to get higher interest rates. If you get bonds with a low yield, you're going to get lower interest rates. Why? Because there's more demand for the U.S. mortgage market, the Treasury market. So in that scenario, you will get lower interest rates, which is what we've had. Interestingly enough, the Fed may or may not affect the interest rates at all, but they will affect your pocketbook. If you're going to get lower interest rates from the Fed, you're going to pay less on your car note, you're going to pay less on your credit cards, you're going to pay less in a number of different areas that are affected by short-term buying. Short-term interest rates by the Fed. Okay, so let's talk about mortgage rates here. Matthew Graham sent this out this morning. 30-year fixed-rate mortgage at 3.875. We've been there for 2 weeks now, maybe 3. That's pretty solid. It's about a half point off of what we were at the lowest end of the spectrum about 2 or 3 years ago. But in the last year, this is about as low as it has come down. The FHA VA fixed rate, 30-year, 3.5%. That's a smoking rate, by the way. Now you add in, of course, the interest that you're going to be paying, not the interest, but the mortgage insurance premiums, the MIP, that's going to be added in there. Maybe about 1.25 off of that and then you're going to have your upfront fee. But that FHA, you're only bringing in 3.5%. You're not bringing in 10% or 15% or 20%, which is what you're going to have to do on a conventional loan. So that's still a pretty good deal. The 15-year fixed is between 3.5 and 3.625, and the 5-year ARM product that they're quoting here, and these are all averages of what is nationally available. The 5-year ARMs are at 3.375. And those ARM products, by the way, are really good if you're looking at a short-term solution to a problem. You've moved to a new city. You've been told you're going to be relocated to someplace else in 2.5, 3 years. You're not going to want a 30-year fixed rate. The difference between one and the other is almost a half a point. Now, that's a lot of money. And that's money that you can put back in your pocket. Half a point on a $500,000 loan could be close to $250, $300 a month. Now, every year, 3 years, that's a savings, 15, 20 grand. Well, why not put that in your pocket rather than give it to the lender if you're especially interested in a short-term rate? If you're moving, like I say, if you know you're going to get in another job, that's what's really important. So the mortgage interest rates are very good, and the type of things whereby finding the home that you want is probably the main, the main goal. So let's talk a little bit about what they say is happening in the housing market. We talked a little bit about the number of houses on the market this year versus last year. Let's talk about that. Okay, so there's about 1.8 million houses on the market in the U.S., and last year there were about 1.9 million. So this speaks a little bit to the lack of product. Locally here in Southern California, I want to say hi to San Bernardino and Riverside. Obviously, I missed that during the show, but hi, I really appreciate KCAA, KMET, K-Tahoe, all our great affiliates that have us on each and every week. But the housing market, the amount of houses on the market and the ability for you to go and get that house is probably good now through September. And we talked a little bit already about the possibility of bidding wars in September because of the lack of new product being brought to the market, the lack of new housing, the lack of building in the market. Finding a way to be able to get your agent, get into the car, drive around, see something you like, and then put in an offer. There's less demand now than there will be, and that's what I'm trying to say. Because of the interest rates and the way they are, because of the way the market is going to trend, and because we have some volatility out there still in the employment sector. I mean, we had a couple of, off months in April and May in terms of the jobs report, but June was smoking, right? So we don't know whether it's an anomaly, April and May, or whether the June jobs report is more in line with where we are and where we're going to be in the future. So we've got an economy which is rolling along. We have a GDP at about 3.2% this year, which is really good, and we have a number of other economic factors, which, if continue, means that we should have enough jobs for everybody, and that's the other component of, low interest rates, housing on the market, and employment. All of these things speak to the fact that I'm trying to tell you to get out there and get in the market today rather than wait. I'm Jeff Barton. I'm your host, and I'm your voice in the mortgage industry. Thanks for tuning in this week, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.